Welcome back to Tell Me More Stories Told as Podcast. Ready for another deep dive into, well, this one is one of the most infamous financial scandals in history.
Yeah, it's a doozy.
It really is.
Yeah.
Today we're going to be tackling the Madoff investment scandal. And this story is about so much more than just money. This is Wall Street. Billions of dollars vanishing, a web of deception that went on for decades.
It's one of those cases that really makes you question everything you think you know about trust and reputation, you know? I mean, we're talking about Bernie Madoff here. This wasn't some shadowy backroom dealer. This is a former chairman of NASDAQ.
That alone is mind-blowing, right?
It really is.
Like if you found out Mr. Rogers was running an illegal gambling ring.
Oh.
So for those of us who aren't, financial wizards,
Mhm.
can we just break down what a Ponzi scheme actually...
Yeah, so imagine like a financial house of cards, right? Looks all stable from the outside, but it's built on an illusion. So in a Ponzi scheme, you lure investors in with these promises of super high returns, practically risk-free. Except those returns, they're not coming from real profits. They're just money from new investors being used to pay off the old ones.
So robbing Peter to pay Paul.
Yeah.
But you eventually run out of Peters, right?
Exactly. You run out of Peters. The whole thing is dependent on this constant stream of new money coming in. The moment that slows down or too many people try to cash out at once, the whole thing crumbles. It's just mathematically impossible for a Ponzi scheme to last forever.
And with Madoff, we're not talking about small change here. This was billions with a B.
Tens of billions, actually. The scale is almost incomprehensible. And what makes it even more disturbing is the wide range of victims. I mean, this wasn't just, a few wealthy individuals. We're talking charities, universities, pension funds. Even a foundation supporting the Innocence Project got tangled up in this.
Wow.
Yeah, the fallout was massive.
Okay, before we get into how it all went down, let's rewind a little bit. To Bernie Madoff's, origin story. He didn't start out as a villain, did he?
No, not at all. I mean, far from it, actually. He began as a penny stock trader, and then kind of climbed the ranks, became a really key figure in developing NASDAQ.
Very legitimate.
Very legitimate background, yeah. And this, paired with, his consistent returns, albeit modest as they were, it created this aura of trustworthiness. It's almost like his early success masked the dark side of what was to come.
Oh, that's a chilling thought. Like he was playing the long game, building up this massive reputation to make his eventual scam even more effective. So how did he actually pull this off for so long? What was his alleged investment strategy?
Well, he touted this thing called a split strike conversion strategy. So imagine this. You buy a reliable car, right? But you also take out insurance to minimize any potential losses.
That's safe enough.
Right. So he basically applied this approach to stocks, buying blue chip companies, and then using these things called options contracts to supposedly limit downside risk.
So options are like that extra layer of financial protection.
Exactly.
I mean, but even with that, couldn't things still go wrong in the market?
Of course. But Madoff was selling consistency. He promised around 10% annual returns, which might not sound sky high, right? Compared to some, risky ventures. But
Hold on, wait. Wouldn't consistent returns like that be a red flag? I mean, I don't know a lot about the stock market, but things go up and down, right?
Yeah.
No one can just magically guarantee that kind of steady profit, can they?
That's exactly the point. You're getting it. In the volatile world of finance, consistent 10% returns year after year, no matter what's happening in the economy, are virtually impossible. You know that old saying, if it sounds too good to be true, it probably is.
Yeah.
Madoff's returns should raise some serious eyebrows.
This is why I need you here. So we've got this seemingly brilliant and trustworthy figure, a strategy that sounds safe, it promises consistent returns, all wrapped up in a cloak of exclusivity. It's almost like a recipe for disaster waiting to happen.
It was.
Yeah.
And what's even more fascinating is that there were people and organizations that did suspect something was wrong. There were cracks in the facade, missed opportunities to blow the whole thing wide open. We'll delve into those a bit later. But first, I think we need to get a real sense of the human impact of this scheme.
That's what always gets me, the stories behind the headlines. Who are some of the people who got caught up in this? And hey, if you're as hooked on this deep dive as I am, hit that subscribe button so you don't miss out on the rest of the story.
Oh, yeah, good point. So the list of victims, I mean, it's truly heartbreaking. You have Elie Wiesel, Nobel Peace Prize laureate, Holocaust survivor. He and his wife lost their life savings to Madoff.
It's just unimaginable.
It really is.
Yeah.
Just the cruelty of it all.
Yeah. What other stories stand out to you?
Well, there's the tragic case of William Foxton. He was a decorated British soldier, and he tragically took his own life after losing everything in the scheme. And then you think about the charities, right? that were forced to shut down because of Madoff. I mean, the ripple effects went far beyond just individual losses.
Absolutely. It's like this
Mm.
poison that spreads throughout the entire system, eroding trust and leaving devastation in its wake.
Exactly.
Yeah.
And then what's particularly striking to me is how Madoff cultivated this air of exclusivity. Like it was a privilege to even invest with him. He relied heavily on word-of-mouth referrals, created this kind of inner circle that made people even less likely to question him.
It's almost like a cult of personality, isn't it? When you're part of that in-group, there's this pressure to conform, not rock the boat. It makes it that much harder to raise concerns, even if something feels off.
Yeah, you hit the nail on the head. People were afraid to question Madoff not just because of his reputation, but because they didn't want to risk losing access to what they thought was a guaranteed win. It's a powerful psychological trap.
So we've got this perfect storm brewing, seemingly brilliant figure, a strategy promising consistent returns, air of exclusivity, culture of secrecy that discourages any sort of dissent. It's almost like Madoff created the perfect environment for his scheme to thrive.
It's a fascinating and disturbing study in human behavior, I'll say that, both from the perspective of the perpetrator and the victims. And what makes it even more intriguing is that there were those who saw through the charade, who tried to sound the alarm. Their stories are crucial to understanding how this could go on for so long.
And that's where we'll pick up next time. Thanks for listening to Tell Me More, and we'll see you on the next deep dive.
See you then. It's mind-boggling to think that this scheme, Madoff's scheme, wasn't some, impenetrable fortress. There were cracks, there were warning signs, things that could have exposed everything. Makes you wonder, what if someone had listened,
I'll talk about those missed red flags. There was this one guy, right, who spent years trying to warn everyone about Madoff, practically shouting from the rooftops.
Oh yeah, Harry Markopoulos. He was a financial analyst. And back in 2000, he went to the SEC with a detailed report, just laying out exactly why Madoff's returns were mathematically impossible. He even called Madoff's operation, quote, the world's largest hedge fund that is a fraud.
Wow. He did mince words.
No, he didn't. And get this, he even had 30 specific red flags.
30. And the SEC just ignored him.
I know, it's shocking. Despite Markopoulos' persistence, he submitted multiple reports over several years. The SEC they failed to take any meaningful action.
Wow.
It's a glaring example of regulatory failure. It raises serious questions about how such a massive fraud could go undetected for so long.
It really is. It's almost unbelievable that someone could be so persistent in trying to warn the authorities, and yet nothing was done. Was anyone else suspicious of Madoff?
Yeah, there were others. Barron's, the financial publication, they published an article back in 2001 questioning Madoff's suspiciously consistent returns.
Oh, interesting.
Yeah, and the journalists even pointed out that while investors were happy with their gains, none of them could actually explain how Madoff was achieving them.
So it wasn't just this lone wolf analyst, Harry Markopoulos, but also financial journalists raising concerns. You'd think that would have prompted some sort of investigation.
You'd think so. But what's even more telling is that some highly sophisticated investors, people who, really knew the ins and outs of finance, they also had their doubts.
Okay, this is where it gets really interesting. Which savvy investors saw through Madoff's charade?
Well, one really striking example is Renaissance Technologies. They're this wildly successful hedge fund, known for their very data-driven approach to investing. They pulled their money out of Madoff's fund because something just didn't add up. The returns didn't align with any logical trading activity.
So even among the Wall Street elite, where you might expect, more skepticism, Madoff still managed to maintain this aura of invincibility. Was it just greed that kept people invested, or was there maybe this fear of admitting they'd been fooled?
I think it's definitely a complex mix of emotions. People wanted to believe in the myth of Madoff, this genius who could consistently beat the market. It's a reminder that even the most intelligent people can be susceptible to deception, especially when it plays on our deepest desires and fears.
It seems like Madoff's scheme was a ticking time bomb. But what finally triggered the explosion? What brought the whole thing crashing down?
Well, like a lot of unsustainable things, it was external pressure that proved to be the undoing. When the 2008 financial crisis hit, markets went haywire, investors everywhere panicked, everyone wanted their money back, including Madoff's clients.
So that's where the inherent flaw of a Ponzi scheme becomes deadly. You can't keep up the facade when everyone wants to cash out at the same time.
Exactly, you said it. Madoff had been relying on a constant influx of new money, but that dried up overnight. He simply didn't have the funds to meet those massive redemption requests. It's like, imagine trying to plug a hole in a dam with your finger.
So facing financial ruin and exposure, what did Madoff do?
He confessed. In December of 2008, Madoff admitted to his sons that his investment advisory business was, and I quote, one big lie.
Wow.
Yeah, his sons immediately alerted the authorities, and Madoff was arrested.
It must have been a devastating moment for his sons to realize that their father, the man they admired, was behind this massive fraud.
Absolutely. And the fallout was swift and severe. Madoff was sentenced to 150 years in prison, that's the maximum allowed, and he was ordered to pay over $170 billion in restitution. His reputation was destroyed, his family torn apart, and thousands of victims were left reeling from the impact.
A truly cautionary tale. It's a stark reminder that even those we deem trustworthy can be capable of incredible deception. What's so striking to me is that Madoff wasn't some shady fly-by-night operator. He was a pillar of the financial community. How does someone like that go so wrong?
That's the question that continues to fascinate and perplex people, I think. It speaks to the complexities of human nature, right? The seductive allure of power and wealth, the dark side of ambition. But it also highlights the importance of skepticism, especially in the world of finance.
So if we can't always rely on reputation or authority, how do we protect ourselves? What are the key takeaways from this whole saga?
Well, that's what we'll explore next. Because while we can't completely eliminate the risk of fraud, there are certainly lessons we can learn from the Madoff scandal. Lessons that can help us safeguard ourselves and make it harder for these schemes to flourish.
So we've uncovered the rise and fall of Bernie Madoff, his elaborate scheme, the devastating impact on his victims, and the missed chances to stop him. But the big question remains, can we truly prevent something like this from happening again?
That's the multi-billion-dollar question, isn't it? I mean, we can't erase fraud entirely, but there are definitely lessons from the Madoff scandal that can help us strengthen our financial systems and make it much harder for such large-scale schemes to operate undetected.
What kind of lessons are we talking about? What could have been done differently, to catch him sooner?
Well, for one, the Madoff case really exposed some serious weaknesses in regulatory oversight. The SEC, despite numerous warnings, failed to thoroughly investigate Madoff's operation for years. This highlights the need for more robust regulatory mechanisms, agencies with more resources, and perhaps most importantly, a culture that encourages whistleblowers to come forward without fear of reprisal.
Yeah, it's not enough to just have rules. You need people who will enforce them and take potential threats seriously.
Seems like a bit of healthy skepticism could have gone a long way in this case. Absolutely. It's about fostering a culture of accountability and transparency, both within financial institutions AD, the regulatory bodies that oversee them, and for investors, it's a reminder that blind trust is never a sound investment strategy.
So beyond strengthening regulations, what else can be done to prevent future Madoffs from, emerging?
Well, education is key. Investors need to be more aware of the red flags associated with fraudulent schemes. Things like consistently high returns, lack of transparency, pressure to invest quickly.
Yeah.
The more informed investors are, the less likely they are to fall prey to these scams.
Knowledge is power, right?
Exactly.
In this case, knowledge could be the difference between financial security and devastating loss. But sometimes, even when we know the signs, those emotions can cloud our judgment, right? Greed, fear, they can be powerful motivators.
Oh, for sure. They're incredibly powerful. And that's where due diligence comes in. It's crucial for both individual investors and institutions. Don't be afraid to ask tough questions. Demand proof of performance. Seek independent verification. If something feels off, trust your instincts and walk away.
Yeah, it's about being proactive, not reactive. Don't wait for a scandal to break before you start questioning things. Be your own advocate, and don't be afraid to challenge the status quo.
I like that.
Yeah.
This case also highlighted the importance of diversification. A lot of Madoff's victims had entrusted him with their entire life savings, all their eggs in one basket, so to speak, and this really magnified the impact of the loss. Diversifying your investments across different asset classes can help mitigate risk and protect you from catastrophic losses, even in the event of fraud.
It's about managing risk. You can't eliminate it entirely.
Yeah.
But you can take steps to minimize your exposure, and diversification is a key part of that. But beyond the practical steps, it seems like the Madoff scandal also reveals something deeper about human nature.
Exactly. It goes beyond just the mechanics of financial fraud. It's about our own psychological vulnerabilities. Madoff, he exploited people's desire for security, their fear of missing out, their trust in authority figures. He understood those primal urges and he used them to his advantage.
It's a reminder that we're all susceptible to these biases, and awareness is our first line of defense.
Couldn't agree more.
Yeah.
We need to be mindful of our emotional responses to investment opportunities and not let fear or greed cloud our judgment. It's about taking a step back, evaluating things rationally, and not being afraid to seek independent advice if needed.
So, as we wrap up our deep dive into the Madoff scandal, it's clear that while we can't entirely prevent this kind of fraud from happening again, we can learn from it and take steps to make ourselves less vulnerable. It's about being informed, being skeptical, and being proactive in protecting our own financial well-being.
And perhaps most importantly, it's about remembering that trust, while essential in any financial system, should never be given blindly. Always question, always verify, and always be willing to walk away if something doesn't feel right.
On that note, we want to thank you for joining us on this deep dive into the Madoff investment scandal. We hope you found it informative, insightful, and perhaps even a bit unsettling. Remember, knowledge is power, and being aware of the dangers of financial fraud is the first step in protecting yourself and your loved ones.
We encourage you to continue exploring this topic. There are numerous books, articles, documentaries out there that delve deeper into the complexities of the Madoff case and the broader issue of financial fraud.
And as you go about your week, consider this. Are there other Madoffs out there right now, operating undetected? It's a chilling thought, but one worth pondering. As we navigate this increasingly complex world of finance, stay curious, stay informed, and stay vigilant. Thanks for listening to Tell Me More.
See you next time.